What's up, guys? Welcome back to Roensch Capital Charts. Today we're taking a look at Micron stock, ticker symbol MU, on a variety of time frames in anticipation of the next trading day, Thursday, March 21st. All right, well, Micron here today, at least in regular trading hours, finished up $2.25 a share. That's plus 2.39%. Here in the after hours, it's up from $96.25 currently to about $112 a share. Likely is a little bit different by the time you're getting around to this video. That is an after hours gain of about 16.5%, at least as of the recording. That, of course, is being fueled by what other than a big AI-fueled earnings beat. Listen, as always, I always say this, guys, take after hours as what it is. Okay, now what I say on almost every analysis video that I do, I'm doing daily analysis on a bunch of stocks, I'm doing monthly analysis every day on a bunch of stocks. I'm always very clear that usually, like 99.9% of the time, it's very important to take after hours with a pretty big grain of salt because volume is usually very low. Now, there's an exception to this, and that is like the 0.1% of the time when a stock has a huge business-specific catalyst, like a big earnings report, that drives after-hours volume to meet or exceed what we saw intraday. Now, we are seeing that in Micron here after hours, of course, due to the big earnings. By its very nature, that makes the move a bit more definitive. However, I have learned over the years I still like to take maybe a smaller grain of salt, but I'm still looking at this as it's still the after hours, and the real test is always the open the following day. It's not uncommon to see big pops and drops, but at the same time, when you see a big earnings report like this, and then a very strong open and continuation on like day one, which I would say, you know, day one is like tomorrow for Micron since earnings were after hours. That's day one continuation, at least in the trading world. That kind of thing is something that we've seen on, you know, stocks like Nvidia lately. Strong earnings report, pops hard after hours, and then you see big continuation the next day. That's a sign of strength, and we'll talk about that in a second. But again, keep in mind, we're currently in the after hours. You know, take it with a grain of salt. It is what it is. We'll know by open tomorrow which scenario this ends up being here on Micron. But a nice earnings here regardless. Let's get started here today with our daily ritual, our volume profile analysis here on the 5-minute chart, and we better include that after hours here and take a look. Now, you know what? Actually, let's do this. Let's cut out the after hours just to start, because I want to start by looking at this little bit of pop and drop that we got off the open. And truthfully, if you look at this, this is so contextual, right? We're trying to pull out any hidden bias that isn't obvious by looking just at the price action. This fade off the open in volume is so contextual that there's nothing there off the open in terms of bias. Now, the next move that I really am interested in, really the only other move, is going to be that after hours push that we saw. Now, this is really interesting because what I'm usually looking for, guys, on a 5-minute chart is intraday moves. I'm looking for volume that is outside of what is typically contextual for that time of day. This is obvious because we have a huge catalyst in the after hours, whereas normally you see almost no volume in the after hours. But when we're looking at intraday, I usually am looking for maybe like 3 or 4 minimum consecutive out of context volume bars in a row, right? Consecutive, right? Here in the after hours though, I think that's kind of a tall order because we're dealing with a business-specific catalyst that blows volume out of the water for like 10 minutes and then typically fades. So we obviously got an incredible 5-minute bar with over 3 million shares of volume, whereas usually I would say that one 5-minute bar, it's too much of a fooled by randomness risk if we saw that just intraday without really any catalyst. I need that there to be consecutive bars of out-of-context volume. But being that there's a catalyst and there's an explanation for why we got the pop and drop in volume, there's a clear, you know, it's not the most obvious bullish bias in the volume profile that obviously in the price action, you know, it's rather obvious, at least in the after hours. Again, take that with a grain of salt. But in the volume profile, which is kind of a separate entity, believe it or not, there's actually not an incredibly obvious bullish bias here, but that 1 5-minute bar, it's understandable why we got the huge pop and drop. And in that 1 5-minute bar, there's a very obvious rebalancing going on with a bullish bias in the volume profile. So just to be clear, if I saw the same thing occur intraday with no catalyst, maybe to a smaller degree, so that would actually make sense, I wouldn't feel good about pulling any bias out of that because there's too much of a risk of that fooled by randomness idea or concept. But we know the catalyst here, and it pumped it to over 3 million shares of volume, which obviously, doesn't even align close. I mean, we got a lot of volume off the open, but it's earnings day. Okay, that doesn't even closely align with that rebalancing volume that we got 1.5 million yesterday, which was with Tuesday, which is already going to be elevated because it's the day before earnings and you get institutional and fund rebalancing really commonly on that first 5-minute bar after the closing bell. So bulls, listen, this is a little bit different from what we're typically looking at for an intraday volume profile, but it's earnings day. It's of course going to be a little bit different. And we got huge bullish bias on that initial push. And then through this consolidation and slow grind higher that we've seen thus far in after hours, understand bulls that, we got a really quick fade in volume that is to be expected. But, sometimes on earnings reports, you'll see 3, 4, 5-minute bars where there's battling going on with a really clear bias. And we didn't really see that today. We actually got a really quick drop off in volume as the stock kind of settled in, much higher. Now, let's move on to the psychological self-fulfilling prophecy levels that I'm paying very close attention to here on Micron tomorrow, starting with the 30-minute chart. By the way, listen, if you have not done so already, please subscribe to the channel. I greatly appreciate it. My goal here is to hit 10K by the end of April, and I think we can get that done with your help, so I appreciate you jumping aboard. Now, the 30-minute chart here, again, we're looking at the most popular indicators we can possibly slap on a chart, not because they're magic, right? That's not my belief here. This entire channel is dedicated to charting, and my belief is simply that it's nothing more, nothing less than a self-fulfilling prophecy. If that wasn't the way it was, by the way, I'd be out of a job. You wouldn't be watching this, because that concept by its very nature is what, offers opportunities and edge in specific situations in the market. Now, look, a couple things I need to point out here. Ignore the after hours for 1 second. I'll get to it, don't worry, right? Last night, we were struggling, or Tuesday, I should say, we were struggling to reclaim the 200 and the 50 period. We just barely reclaimed it, not really enough to be definitive into the after hours. Today, heading into the close, we actually reclaimed both, which is a great thing to see. We got 2 tests of the 50 period and 2 bounces. The volume was okay. I would love to see a little bit higher volume, but on that second bounce, we did get higher volume on that pull away from the 50 period, and then we retested the 200 period, and we got higher volume on the pull away. It's a great thing to see. The sample size of the market, bigger sample size, comes together and says, okay, we're going to reclaim both of these heading into earnings, at least specific to the 30-minute chart. Now, after hours, listen, this is going to be very dependent on whether or not Micron holds the move tomorrow, okay? But bulls, best case scenario specific to the 30-minute, I want to see this 50 period moving average rip upside as quickly as possible, get above $100 a share, if not more, get some feet, a psychological barrier, anything that has a lot of eyeballs, up underneath the move as quickly as possible. The best bet for the most eyeballs and the quickest moving is going to be the 50 period on the 30-minute chart. You'll commonly hear me say, it's great to see massive moves like this, but there's one inherent problem with them that typically surfaces later if we don't see, a psychological barrier get up underneath it, is that you're left with a lot of bears making the argument that hey, the stock's floating on thin air. Bulls, that can really easily be put to rest by getting a barrier up underneath very fast, right? Again, the 50 period, that white line here on the 30-minute is the quickest moving, that has the most eyeballs. Okay, that's going to be the best bet to make that happen. All right, now bears, you guys would want to see that 50 period, for whatever reason, flatten out ahead of $100 a share depending on the price action that we get off the open here tomorrow. All right, now the 4-hour chart. Okay, the 4-hour chart, listen, with this after hours move, it's not going to be incredibly contextual. That 50 period's at 96 bucks right now. Okay, bulls, understand this is a slower moving average. It flattened out recently. It is starting to curl upside now. You know, best case scenario bulls, understand this is going to take time. It's not going to be super in play, assuming the move holds quickly. But the ideal scenario is that 50 period on the 4-hour adds a second psychological barrier as soon as possible over the course of the next week, maybe 2 weeks, as that thing moves higher, claims 97.50, claims $100 a share. But understand it's going to take time. Okay, bears, obviously you'd like to see that thing flatten out ahead of $100 a share. But again, it's going to take some time. Don't expect too much from the 4-hour chart, at least too quickly. It's a slower moving average, naturally. All right, now, if there's one chart you do not skip the daily. Okay, you can see here, the daily does not show after hours movement. So after hours, the stock is currently sitting above 112. The close was at 96.25. We should zoom out and get a big picture here on Micron. Now understand that the all-time high on Micron, previous to now, in the after hours, was 101.85. Okay, now if we zoom back in, here, we'll do this. The stock is currently in the after hours around here. So Micron just blew that all-time high out of the water. Listen, we're now above 110, and when you have big earnings moves in the after hours like this, you know, we have to take it with a grain of salt, but we also have to consider that there's been a fundamental change and the stock price is now in a very different spot. Okay, so a few things I'm watching given best case scenario, kind of a moderate scenario, and like a worst case scenario off the open. $100 a share, if it comes into play at all, is going to be huge. Okay, bulls, you want this to remain a triple-digit stock. I think $100 a share is more important, again, if it comes into play at all, than the previous all-time high of 101.85. Personally, I think the strength there is I think it has a lot more eyeballs, okay, simply because it's a huge psychological level. But really, bulls, the stock's in the after hours is at 112. I think the story tomorrow is, can Micron hold 110? I mean, guys, a break and hold of 115? That's a power move out of the bulls. That shows some continuation. That shows that, no, we weren't full of it in the after hours. We meant it when we bought this thing up to 110, and there are people willing, and funds and institutions willing to pay 115 now. We meant it. This is a fundamental change. Okay? A hold of 110, though, is, like, I think the story on Micron tomorrow. If we break downside back, you know, below 110, below 105, all of a sudden $100 a share is the story. But if we test 110, or better yet, get above 115, we see a little back test and hold, big bounce off 110 or big bounce off 115 on high volume, that's a power move out of the bulls. Okay, and by the way, I don't mean for 4 minutes and then it fades. I mean spending as much time during the day tomorrow, even if it's just a sideways day, I don't care. The name of the game after a big earnings report like this is to hold the move, if not grind higher. Grinding higher is the cherry on top. Man, we just had a big after hours move, and holding that and showing comfort up in that region is as powerful of a move as anything. Now, bears, okay, or bulls more so, I'm talking to you bulls. You need to understand that there's a lot of bears tonight. Whether they are confident enough to come out in the forum, or whether it maybe our free Discord, whatever you're talking to people on, whether they're coming out of the den or not, there are bears that are not going to sleep tonight because they want Micron to be below $100 a share. Bulls, you need to understand the other side, arguably more than your own side. It's great to sit and read a bunch of bulls saying this thing's going to 150, right? That feels great. But are you here to feel good, or are you here to make money at the end of the day? It's uncomfortable. to look at the other side, but it is arguably more important. It's easy to understand your peers. Not a lot of people can look to the other side and say, okay, why are the bears bearish right now, aside from emotion? Understand that, okay, I see how this looks. The stock looks like it's trading on nothing. Psychological barriers upside would help that, but right now, the bears have a little bit of a point. Here's why I think they're wrong, and then back up your thesis, not using emotion, using legitimate ideas, whether that be technical or fundamental or a mix of both. And if you can do that, that's real confidence in your position, right? Not just watching anything or looking at anything that confirms your bias. That's fake confidence. Anybody can do that. It's very easy. Quick little dopamine hits. So, both of you guys, bears and bulls, take a sophisticated, emotionless look at your positioning and really take a deep look and try to understand the other side here. These big moves bring out the emotions in people, the best and the worst. Embrace that. Dig deeper. Feel more. Okay? And keep it under control. This is practice. You're going to see these kind of moves a lot in your career. Get used to it now. Do the hard work now. Whereas everyone else is going to do what feels good and what's really easy. Now listen, a couple of other things that I want to make sure you guys are aware of. Implied volatility. I expect to see this change tomorrow. Okay? I will not be surprised at all if implied volatility fades. Understand, if it does fade, that's called IV crush. It's very common after earnings. It's less common to see IV rise the day after earnings, but it sometimes will occur if you see a huge move. That's good for option holders. But just understand, you guys that own options, if IV dumps, which is very common after an earnings report, that's IV crush. So if you're a bear, or for example, let's just leave out the bulls and the bears. If you lose more money than you thought you might on options tomorrow, and IV went down, that is likely your culprit. If you make a little less than you calculated out on your options tomorrow and IV went down, that's the culprit. Okay? Now, if IV spikes again, which again is the less likely scenario, but if it does spike, some of you guys who are right directionally, you're likely to make more money than you actually thought if you didn't already consider IV. So IV is very important, okay? Buying contracts when IV is very high, you have to consider that within your risk profile and accept that and say, I still think there's money to be made here, even given the elevated risk of IV crush. Okay, just very important to understand IV. A lot of options traders overlook that, and understanding that gives you not necessarily edge, right? There's a lot of things that go into developing edge. I mean, that's what we're doing every day in the Roensch Capital Gold server. If you want to take a look, it's the link in the pinned comment. I encourage you to do so. I think you'll find that it's more than worth it. But understanding implied volatility, Vega, the Greeks in general, but especially Vega, it will instantly make you a much better trader. Okay, it's relatively simple to understand, increases your trading skill exponentially. All right, last part here. This is my favorite part of the video. What was the bias out of traders today? Now understand, this was intraday. Okay, so I'm very curious to see how this changes tomorrow given the after hours fundamental change. But this data set, this sample size was from before earnings hit. We had 416,000 total contracts traded today, 283,000 calls, 132,000 puts. That short-term bets being placed. The short-term speculator delta range of 0 to 20, 105,000 calls, and about 71,000 puts. So, we saw quite the call side bias heading into earnings here today. Listen, if you got value out of this video, please subscribe to the channel. I greatly appreciate it. Maybe leave a like on your way out. Don't forget to comment down below your vote. Just comment the ticker or the company name for tomorrow's wildcard stock. Whichever ticker gets the most votes is the stock that I'll cover here tomorrow. That'll be the winner. I appreciate you, and I'll see you in the next one.